Hello, everybody. Good morning, Valeria. Good morning, Yohei. Welcome to this live coverage from the ECB and the Mario Draghi speech. How are you, Valeria?
Hi, Mauricio. Hi, Yo. Hi, everyone. Welcome to this live coverage. Yes, as you said, we are going to cover live whatever the ECB has to offer today to the markets. And well, really glad to share this time with you guys.
Thank you. Yohei, how are you?
Hi guys, I'm doing great. Looking forward. It's back to school now. We had lots of action in August, and I think also today markets are tense and looking to hear from Draghi, and I think we'll see quite a lot of action.
I really hope so too, yeah.
Yeah, so what we expect from the ECB today?
Well, in fact, of course, we are not expecting many changes in the policy because the ECB has launched quantitative easing earlier this year, and we know the ECB uh, likes to wait and see, right, before taking new measures. But considering the latest market turmoil and whatever is going on with China, and the fact that the economic growth in the euro area is still slow, and not to say that inflation remains subdued, I'm really expecting a really dovish stance from Draghi today. I'm expecting the ECB to downgrade a bit their forecasts, right, when it comes to inflation. And I'm expecting Draghi to say that they are willing to do whatever it takes and remark that the quantitative easing program is open-ended and that they can extend it whenever they want to in date and form and amounts. So mostly I'm expecting a dovish ECB today. Not sure what your hike waits for.
Yeah, I certainly agree with you, Valeria. I think given the recent developments, first of all in Greece, but of course in China, it's the most important thing, and the chances that the Fed will delay the first rate hike, I think that we have a good chance of hearing something dovish. But I also think it's also priced in. So if we just hear from Draghi something we are ready to do whatever it takes, and we'll let you know when time comes by, I think we'll see, of course, a lot of action. But I think Eurodollar will wait to hear from the Fed. That means we'll wait to hear from the non-farm payrolls.
Tomorrow,
If we get some, which is in 24 hours time. But if we hear something more specific, like we're going to act probably in December and enlarge it to, let's say, 100 billion euros per month of bond buys and make it indefinite, maybe, I mean, without commitment, but with more possible details, I think the euro could fall more. And if Draghi says that everything is going as planned, I think the euro will rise. But I think this has a low chance, and as you said, we'll probably hear something dovish, but probably without any details.
Yeah, well, details are not his specialty, right?
No, his specialty are he specializes in dramatic pauses.
Yeah, yeah, Italian. He's Italian.
Yeah.
Anyway, I do agree that market attention is mostly centered in whatever happens tomorrow with the payrolls. I believe that the market is still unclear of whether the Fed will make or have a rate hike or not this September. In fact, I was reading a few minutes ago on Twitter, right, that one of the Fed officers, and I believe it was Fisher, yeah, who says that delaying a rate hike due to market swings could show that the market is in control, and that's not the mission of the central bank. He said that a few minutes ago. So I do believe that in general, officers are really willing to start rising rates this September. And non-farm payrolls tomorrow could be even more important than today's ECB release, because it will be a huge tip on whether the Fed can or cannot do it, you know? And one thing I would like to add to what you have said before is, indeed, if Draghi comes with a confident stance, the euro may rise, the market may move, we may have action, but considering that the market is also thinking of tomorrow payrolls, we may see some restricted price action, and we may get disappointed.
Yeah, I agree. I think, as you said, the Fed always said it's data dependent. and data has been on one side positive. On the other hand, we have turmoil in markets, and as some critics say, the Fed sometimes works for Wall Street, and that's especially correct for James Bullard of the St. Louis Fed. Each time markets go wrong, he reacts. But on the other hand, yeah, they want to. The U.S. economy is improving, and they want to have to show that they're confident that it's improving, and also to have more tools in the shed to act if it deteriorates again. So they do have reasons to raise rates. So, but I think, as many others in the Fed said, it's a close call. Not everybody has made up their mind, and tomorrow's number could help them make a decision. Yeah, sorry?
No, yeah, I was agreeing with you.
Yeah. And there are no more excuses, low liquidity, low volatility. I mean, now it's everybody's back. It's September, and we're going to see markets react.
Yeah, on Monday is holiday in the US, right? The Labor Day holiday.
Yeah, Labor Day.
Yeah.
Yeah.
So after Monday, we will have a more volume action in the market, I hope.
Yeah, and also China is on holiday.
Yeah.
But let's say from Tuesday on, we'll have the full market reaction to everything we have this week.
Yeah, indeed, Monday and Tuesday will be pretty interesting days. Anyway, I don't know what you think about the euro, but I have set a Fibonacci retracement to the last 2 weeks rally. And the price has been having a hard time to regain the 1280 price zone this week, which is the 61.8% retracement of that 2 weeks rally. So technically, I see a mild bearish tone, but if the price manages to advance beyond that level, I would expect some further gains for today that can extend to up to in between 1330 and 1360, which is the 50% retracement of the same rally. But on the other hand, I'm seeing that 11180 is the level to watch to the downside, because the pair has held there plenty of times during the last few weeks. So if we lost that, then the risk turns towards downside. Anyway, I do still believe, I hope I'm wrong, but I still believe that we're going to see not as much action as we would like today.
Yeah, yeah. It depends on Draghi. If he does give us more meat, then of course there will be more action. But I think we are not the only ones waiting for the Fed, and the NFP, I think he's also waiting. So that could make him say something dovish, but not commit on anything, not reveal any details.
You think they don't speak between each other? They don't know? You think Draghi does not know whatever the Fed is planning to do? Yeah.
Well, if the Fed doesn't know itself, I don't think Draghi knows.
Yeah, you have a point there, indeed.
Yeah.
Anyway.
No, maybe some people talked in Jackson Hole, but at least, I don't know, let's say, I assume that the Fed doesn't know, so nobody knows.
Yeah, okay. I can't disagree with that. Anyway, what about pound? What do you think about pound? It has been on a selling spiral, poor pound, unable to pick up. We saw a limited upward corrective movement yesterday, really limited, but I'm taking a look at my daily chart, and the pair has lost pretty much 600 pips straight, right? And with no real catalyst behind the slide, except market fears, Chinese turmoil, or whatever you want to call it. What do you think with what can happen with pound these days?
I think the move is a bit exaggerated. Also, Mark Carney, the governor of the Bank of England, is waiting for the Fed. I think the Bank of England wants to raise rates only after the Fed does that. But in general, the situation in the UK continues being positive. The pound was hit a bit too hard, so money went into the yen and into the euro as safe haven currencies, but and the pound was sort of a bit left behind. But I think the move is a bit exaggerated, and I think that if the mood in the markets improves, stabilization in China, optimism about about the US, I think the pound could rise as well.
Yeah, I agree. I agree with you. It's the seventh day, seventh negative day in a row. I think the next target is 152, and then it could be then the open door to 150. I don't know what you think.
Yeah, I do see some long-term support in the 5170, 52
Yeah,
price.
150, 170.
Yeah.
Yes.
So I do believe that if we lost that level, yeah, we can retest 50. But I have to say, I do believe that the bearish run it's a bit overextended, and there's a good chance that it can make correct higher. Anyway, it hardly reacts much to the ECB, right? And it will react more, hopefully, with payrolls on Friday than today. Of course, we don't know what Draghi has to say, but I expect the reaction to be a bit more limited today.
Okay, I have a question from the chat. There is Lamar say that USD, well, it's not a question, it's a comment that USD Swiss franc is consolidating around 0.97 and his bearish is bullish, awaiting data.
Uh,
There is a
I-
riot run, Swiss franc will run after this consolidation. What do you think?
Johan, you want to answer?
About the Swiss franc,
Yeah, I can.
I must say it's a currency I really don't like because of the ongoing intervention by the Swiss National Bank. So I'll take the next question.
Okay, yeah, I was about to say that the pair should advance because that's what the central bank wants. We have been seeing intervention ever since they lift the peg, and I don't know, it was an atomic bomb in the market earlier this year. So it's not much of a pair that is tradable, the technicals or the fundamentals, because you don't know when or how the central bank will jump into the pair and whatever it will do. Anyway, indeed, it's in a consolidative path near the highs, and technically, it seems poised to advance, right, to extend its gains. Of course, it will depend on whatever the ECB does right now, but technically, yeah, it looks like it wants to advance further.
Okay, well, there is another question. It's from Nick from the chat room. Can you tell me why the euro dollar, what will be the euro dollar reaction after Draghi, and if we should prefer from downwards?
We should prefer what? Sorry, I hear you a bit low.
From downwards. Sorry, I will put my micro
Okay.
closer to me. Yeah, if you prefer the bearish side.
Well, pretty much what I was saying before, and we were saying before, in fact, it's all on Draghi, right? If Draghi is a bit more confident in the ongoing situation and they don't review the forecasts of growth and inflation, the euro may gain some ground and advance, right? But if Draghi is dovish and we see a downgrade of inflation forecast, and then the euro will, of course, be under pressure.
Okay, and we got Dale here.
Good day, everybody. How are you?
Hi, Dale. How are you?
Good. Good. Hi. Hi, Yohei, Bell, Mauricio, the fearsome foursome are here. So we're waiting for a press conference.
Yeah, I hear you.
Yeah, 15 minutes.
The Rip Van Winkle markets continue, huh, Bell?
Yeah, they're sleeping.
Yeah. Fight ranges again. I'm still in the camp, guys. I don't know what you guys were discussing, but to me, I still think the euro at least has to correct this decline from over 117 to the recent lows, and that rally to 1320 I don't think was enough. So perhaps we get a bad number tomorrow in the NFP.
Well, we have the ADP. The ADP came less than expected yesterday.
Mm-hmm.
so it could put some pressure in the Northern payrolls tomorrow.
Well, this will be a good test for the euro. Let's see how Draghi, if he can talk it down here and start getting closes back under 111.80. That would change the picture for me.
1180, right? Yeah, I was saying pretty much the same. That's the level I'm looking for right now to break towards downside to confirm a downward confirmation.
But remember, Val, yesterday in our brief talk, we both thought that the Dow could work its way back towards 17,000 into maybe the Fed meeting.
Yeah.
That seems to be manifesting. You know, that would argue for a higher dollar with the market recovering.
Yeah.
So I have a lot of conflicting things going on here. I can't get bearish euro, and yet I still think that the Dow recovers to 17,000 and then goes to that line that comes in around 14.
Yeah.
I've even seen counts down to about 12,000 in the Dow.
What? I didn't hear the last you said.
Hard for me to believe that we're going to have a strong dollar in that environment if that happens.
Okay.
But anything can happen. So I almost have more confidence about the count in stock indexes than I do in euro. I see the pattern clearly.
Okay.
Canada still hasn't made a new high. Crude came back pretty nice, guys, yesterday after that sell-off.
Yeah, but I get the feeling with the Canadian dollar that it falls than falling oil and hardly recovers when oil prices bounce back.
Yeah.
So the market wants to sell the loonie, no?
Yeah, it looks like we should a lot of talk about 134.80, 135. Should be able to do that.
Yeah.
Guys, we got a question about the gold. What is next for the gold?
I was watching the chart today, and I was thinking that gold has rise, right, in the back of fears triggered by China, right? We have that strong rally and retracement and back up. And I noticed that the metal has begun to fall back because China's market stabilized. And today, because they were closed, right? Yesterday, we have a slight decline in Chinese stocks. And today, we have a sharp one in gold, despite Chinese markets were closed. And that is sort of telling me that most of that buying came as a safe haven demand from China, right? And that if the situation gets quieter, there's a good chance gold will continue falling. Of course, we have the ECB and the payrolls in the middle, and that's a bit messy because we don't know how the market will react to those two. But mostly, I still preferring the downside in oil, in gold, meaning I believe that we are still going to see a lower low than that 10-17 before we actually bottom longer term and advance. Anyway, for the upcoming hours for today, right, it will of course depend on euro reaction, and it will probably follow the euro. Whether if Draghi is hawkish, we are going to go higher. If Draghi is dovish, we are going to go lower in the year. 10-11 for me is critical support level right now, around there, right? And if we lost that level, then I will be a happy seller in gold.
I see. Any other want to comment something about the gold?
No. Gold depends a lot on speculation about quantitative easing, about low interest rates. That's one of the things that fuels gold. So if we have a delay in the Fed rate hike, it's positive for gold. And if we have the rate hike coming on, it's negative. But that's what I can add. Yeah.
Let's see, we have another question from Bedran from the chat. It's for Valeria. He's for Valeria. It's about what do you think, Valeria, from the JPY Japanese yen?
the Japanese yen. I do see that the pair has been pretty bearish for me. I also have a Fibonacci retracement to the last 2 weeks decline, right? Those 2 white weeks we have in the market that ended with a Black Monday. And the price has managed to regain ground up to the 61.8% retracement that failed there, right? We also stand below the 200 simple moving average in the daily chart, pretty close to that level. So honestly, I'm seeing it's still bearish. I do believe that the risk is still to downside, and I do expect little reaction today. Okay, little reaction. Dollar Japanese yen tends to wait for payrolls, and whatever payrolls had to say will determine if the pair can continue going lower or not. In short term, we have this Fibonacci level to 140 area. I would like to see it above this level to see an approach to 21, right? And above this Fibonacci to confirm further gains. And if we lost this one, 1935, sorry, not 17, 1935, then I would expect the pair to go close to this while low in 16. But technically, I hate when the payrolls are in the way.
Okay, thank you, Valeria. And there is a question from the three of us. Let me show you. There is a question from the three of us. From BGM, it's cool. Well, right now we will have the US trade balance. So will we expect high volatility after that data? What do you think?
Yeah, we have ES trade balance, initial hopeless claims in the news, ES alongside with the beginning of the ECB press conference. And usually we see some spikes in the market when we have those releases, but the market won't take much directional strength until the rug is done. So beware of those spikes that can go either side of the board.
Yeah, I think they could cause some action. The jobless claims and trade balance, limited action on dollar yen. It reacts better to US releases, but the market will refocus in the US towards the ISM non-manufacturing PMI at 2 p.m. GMT, which is a much more important figure and a big hint for the non-farm payrolls, and that's also after Draghi finishes talking. So that's the main US release for today, not the ones coming at 12:30 GMT.
That's right. That's right.
I think eventually we're going to take out that 116 low, trade down towards 110, 109 yen. But if I'm correct about the recovery in the Dow back to 17,000, I think there'll be better levels to get short the yen, possibly up towards that 121, 122 level. So that's my view.
And Teddy from the chat is asking about your comments on the euro Canadian dollar. I don't know, it's not that common far, but if
I don't think I have a chart for that, so I will leave the honors to the guys.
Hey,
I didn't hear Mauricio. What's the question about?
It's the euro Canadian dollar. What is your take on
Oh,
it?
Euro CAD.
Euro CAD, yes.
Well, I mean, it had a tremendous move into the crash. You know, we got up towards 155, 156. To me, I think I want to see some type of retrace there as well. I mean, I'm not bearish euro, so I'm not bearish euro crosses. It's much weaker than the euro Aussie, but I think that we could rally back. We went from 157 to 147. I'll be looking at behavior up around 152, 153 for a potential shorting opportunity. But we had confirmed highs on the crash day. It's even possible we're going to retest those highs. That's the way it looks to me.
Yeah, the current range is between 147 and 150. Of course, euro enjoyed the safe haven flows, and Canadian dollar fell on oil. Currently, it's trading in a much more tense range than last week, of course. Yeah, the focus now is on Draghi. If he goes extremely dovish, the pair goes down. If not, I think there's room for a rise. Yeah.
So we got a chart from.
It's a pretty wild pair. So one thing I would say to everyone trading EuroCAD, reduce leverage.
Yeah.
Because it's very difficult to trade without less than 100 pip stop for money management.
Yeah, it's not the US dollar against Canadian dollar and the euro at the same time, but actually the euro and the yen are in the safe haven camp, and the Canadian dollar is in the risk camp, so the moves are much wilder and not limited like in other pairs, other crosses.
Yeah, John Lambert in the chat room is sharing with us a chart from the GAPI, the GPY Japanese yen. He's saying that there is room to the downside to the 183 area, 183 or 183.50. It's a good.
He's a mad scientist, Ruach. So looks like kind of a naked chart for him. Is that the one in the black right there?
Yes.
Okay.
Yes, it's this chart. It's this chart.
He's a good technician.
Yeah. Okay, so there is a question. There is another question. Let me check. I'm trying to. What is your opinion about the U.S. dollar economy, current growth, and what will be the short-term impact? Yeah, what is the short-term impact of if the Fed decide to increase rates? Yeah. Otherwise, in ECB interest rate decision, what could be the impact in this both economies? What do you think, Johei?
Well, in theory, a rate hike of 0.25% is not supposed to be significant, but and I think the Fed has prepared us for quite some time for this kind of hike. In addition, I think they'll add to this hike some kind of wording saying it's some kind of one-off, we'll wait and see towards the next hike, basically hint that the next one will come only in 2016. So in this kind of scenario, I think we'll have markets moving quite a lot because it will be a very historic event, but on the other hand, it's not. I don't think it'll have a big impact on the U.S. economy. U.S. economy is growing slowly, and the rate hike of 0.25% should be quite minimal.
Yeah, what do you think, Dale?
Well, just to push back on that, this is not my thinking, but I saw a pretty good analyst on CNBC, and he was making the case that even though it's symbolic, that it's going to have some major impact. One of the main drivers of the U.S. economy lately, or for the last few years, has been auto sales. And he's saying that even though it might be a nominal amount a quarter, that they're going to start raising the dots on financing that could hurt auto sales and have a trickle-through effect on the overall economy. So he thinks the risk-reward of tightening is not the right thing to do, and that it will have impact on financing one of our major industries, autos.
Okay. Yeah, go ahead, Valeria.
Yeah, it's time. I don't know how I will check. Oh, the data.
Yeah, it's time, but the press conference in beginning.
Yeah. Okay. Initial shortlist claims came out worse than expected, up to 282 against previous 275. The U.S. deficit shrunk. 86.
Jobless claims just came out.
Expected. But we are all waiting for Draghi now. Little reaction to U.S. data, right? little or non-reaction. One good one.
Yeah, it's not. Okay, I think Draghi is coming into the room.
Hey, look, Al.
Here he is, yeah.
Let me see how it's looking.
Blue tie. I don't know what it means, though.
It's buffering.
So 1:12:27 as the cameras take pictures of Draghi. Let's see
Yeah.
where it'll be afterwards.
He's smiling. He does not look that bad as he did a couple of minutes before.
Probably had a good vacation.
Yeah.
He's been working out with Putin.
He has not. I remember a couple of months ago he has huge bags below his eyes and a really serious face, and said, "Oh, that's trouble."
He was day trading then, Bill.
And I do believe that he has makeup today. There we go.
Yeah.
Walking it down. Walking it down. Big move.
Yeah, but he didn't.
That was a break to buy. I think.
Oh, they decide to increase the amount of quantitative easing.
No, the conditions on which they buy QE bonds.
Okay.
Issue share limit.
Yeah.
New projections.
And an interim evaluation of recent market fluctuations. Information available indicates a continued, though somewhat weaker, economic recovery, and a slower increase in inflation rates compared with earlier expectations. More recently, renewed downside risks have emerged to the outlook for growth and inflation. However, owing to sharp fluctuations in financial and commodity markets, the Governing Council judged it premature to conclude on whether these developments could have a lasting impact on the outlook for prices and on the achievement of a sustainable path of inflation towards our medium-term aim, or whether they should be considered to be mainly transitory. Accordingly, the Governing Council will closely monitor all relevant incoming information. It emphasizes its willingness and ability to act, if warranted, by using all the instruments available within its mandate, and in particular, recalls that the asset purchase program provides sufficient flexibility in terms of adjusting the size, composition, and duration of the program. In the meantime, we will fully implement our monthly asset purchases of 60 billion euros. These purchases have a favorable impact on the cost and availability of credit for firms and households.
And the lower euro, of course.
They are intended to run until the end of September 2016 or beyond.
Or beyond,
if necessary.
Keyword.
And in any case, until we see a sustained adjustment in the path of inflation that is consistent with our aim of achieving inflation rates below but close to 2% over the medium term. We now explain our assessment of the available information in greater detail, starting with the economic analysis. Real GDP in the euro area rose by 0.3% in the second quarter of 2015, which was somewhat lower than previously expected. The latest survey indicators point to a broadly similar pace of real GDP growth in the second half of this year. Overall, we expect the economic recovery to continue, albeit at somewhat weaker pace than earlier expected, reflecting in particular the slowdown in emerging market economies, which is weighing on global growth and foreign demand for euro area exports. Domestic demand should be further supported by our monetary policy measures and their favorable impact on financial conditions, as well as by the progress made with fiscal consolidation and structural reforms. Moreover, the decline in oil prices should provide support for households' real disposable income and corporate profitability, and therefore private consumption and investment. However, economic growth in the euro area is likely to continue to be dampened by the necessary balance sheet adjustments in a number of sectors and the sluggish pace of implementation of structural reforms. This assessment is also broadly reflected in the September 2015 ECB staff macroeconomic projections for the euro area, which foresee annual real GDP increasing by 1.4% in 2015, 1.7% in 2016, and 1.8% in 2017.
Economic recovery in a
Compared
slower
with the June 2015 Eurosystem staff macroeconomic projections, the outlook for real GDP growth has been revised down, primarily due to lower external demand owing to weaker growth in emerging markets. The risks to the euro area growth outlook remain on the downside, reflecting in particular the heightened uncertainties related to the external environment. Notably, current developments in emerging market economies have the potential to further affect global growth adversely via trade and confidence effects.
Yeah.
According to Eurostat's flash estimate, euro area annual HICP inflation was 0.2% in August 2015, unchanged from June and July. Compared with the previous month, this reflects a further decline in energy price inflation, compensated for by higher price increases for food and industrial goods. On the basis of the information available and current oil futures prices, annual HICP inflation rates will remain very low in the near term. Annual HICP inflation is expected to rise towards the end of the year, also on account of base effects associated with the fall in oil prices in late 2014. Inflation rates are foreseen to pick up further during 2016 and 2017, supported by the expected economic recovery, the pass-through of past declines in the euro exchange rate, and the assumption of somewhat higher oil prices in the years ahead, as currently reflected in oil futures markets. However, this increase in annual inflation rates is currently expected to materialize somewhat more slowly than anticipated thus far. This assessment is also broadly reflected in the September 2015 ECB staff macroeconomic projections for the euro area, which foresee annual HICP inflation at 0.1% in 2015, 1.1% in 2016, and 1.7% in 2017. In comparison with the June 2015 Eurosystem staff macroeconomic projections, the outlook for HICP inflation has been revised down, largely owing to lower oil prices. Taking into account the most recent developments in oil prices and
Okay, so really dovish. We already have our ECB intervention in the euro.
Oh, bless Europe.
We have 100 pips down.
Yeah.
Yes.
And there should be stops below 11.20.
Very dovish.
Yeah, very,
Really
very.
dovish. There is well, we were waiting for an ECB intervention, verbal intervention, so we got it.
So he has been forced to do more things and sort of recon that so far quantitative easing is not doing as good as he expected the previous months, right?
Stock market loves it.
Yeah. They love a cheaper euro. And the DAX is positive on the week for the first time, I believe. We're about to. And gold is getting crushed alongside with the euro. Pound is hardly reacting to the news. What we're seeing in pound and yen comes from process from the euro rather than anything else. But not much good news for the euro, right?
You hear some kind of echoes. Anyway, we have 100 pips down.
Yeah, 100 pips down, right? That's. And as they said before, yeah, the S&P just jumping to 1970. Yeah.
Looking for 2020 to 2040 in the S&Ps in the upcoming weeks, and then 1720.
2020?
2020, yeah.
It's pretty
Probably
high.
before the Fed meeting.
Yeah.
And then one more wave
Very
down
high.
into October, and then maybe the correction's completed. If the bulls are right, that should be it, and we should have a decent end of the year type rally into 2016.
It's pretty high, yeah.
But see how I was conflicted? I felt more confident about the market going up, but couldn't get bearish euro. And you know, the market's not going to get to those levels if the dollar is, you know, crashing. So, where do you guys think the euro could go to now that we're taking out these support levels?
1120 is a strong support level, so I'm not seeing it breaking below it right now. We may see a bit pullback up to 1160. Let's see if it can go back up to 12. But if we take 1120, then 1080, 1050 area, it's bottom for today. I would expect some consolidation after this initial wild move in between 1080 and 12 for most until tomorrow's payroll, and the rate and the range start shrinking as the day goes by.
So right now, what is your take, Valeria? Just going into the northern payroll for not only the euro dollar, but also for the dollar Japanese yen.
Well, as I said about the Japanese yen, I still believe it's bearish, but I would like to see the result of payrolls because the pair tends to do what we are seeing, right? Trading in a 20 pips range and with not much directional strength ahead of payrolls.
They're selling the Dow.
What?
They're selling the Dow on this pop.
Yeah.
Yeah.
So as for dollar Japanese yen, it's a wait and see until payrolls, and for the euro, I still believe we have a pretty good chance to resume the downside. It will depend on payroll, of course, but 1120 is for me a strong static support area. The pair has bounced there or retreat from there when it was below it multiple times over the past 4 or 5 months. So I will be watching that level intraday, right? I do expect it to hold because we have payrolls tomorrow. If not, we will probably break through it. And well, the next will depend on payrolls. But if we take it, 1080 comes next, and pullbacks up to 12 would be seen intraday as selling opportunities for me.
Okay, there is a question from the chat. Esther is asking why the Australian dollar is raising. What's going up, the Australian dollar?
What's going on in the Aussie or everything? It's the process, right? The process in between the Euro CAD, Euro Yen, and all of those processes taking a hit by a lower euro, helping the others recover some ground. And that's it.
I don't see big movement so far in commodity currencies. I mean, not in the last few hours. In general, they are way down because of China for obvious reasons. And even if the ECB prints more euros, I think the support for these currencies would be quite limited. They depend much more on China than on what's going on in the Eurozone.
I see.
The Aussie has broken that monthly trend line, if you want to show it.
Yeah.
We talked about it last time, the monthly on the Aussie, going back to, I think, 2000. Oh, yeah. Yeah.
He's a master druggie.
There we are.
Okay, there is a comment from Alienovich, a long-term Dale friend. He's saying that euro-dollar is approaching a nice support area for at least a bounce. And he's sharing this chart. You know, he identified, well, you can see, he identified the 11, the green box is from 11.
Yeah, 110.80. He has the buy zone between 110.80 and 109.30.
We can go back.
We're not there yet.
We can go down there if we have a strong payroll.
Yeah.
930 seems to be too much, but yeah, close to 1050 probably. Okay, now what? What's next for the euro area now?
So there is a pretty dovish statement. They want to take the euro down for sure. What?
Yeah, I think Draghi succeeded in taking down the euro without committing to anything new by lowering the forecast, especially inflation, to 0.1 this year, for example. He hit the euro hard, also with immediate steps, even though they were small, in changing the issue limit of which bonds they can buy. He showed that they're willing to take action. So we managed to push the euro down, but without anything big. Still waiting for the Fed with the lower euro, showing also the Chinese that the ECB is also participating in currency wars. I think, yeah, he had a good appearance so far. It's falling even lower. What did he just say?
Yeah, let me check if we have another question. So Philip Sevis is asking for the target for the euro dollar short. I know that you already talked about that, but if we can remind the targets or the significant levels.
As I said before, I do believe that 1120 is a quite significant support right now, so below that we may send the decline in the short term and go down to 1080, 1050 for the most today, right? And that's pretty much it.
Yeah, for me it's 1130. It was the high at the end of July, but it's basically the same. And yeah, below it's about 11050, which was an old line that was sort of a clear separator of ranges. As I think we mentioned before, we could see some limits on the action today because of the waiting for tomorrow's non-farm payrolls. But the move so far is better than I had expected.
I'll say words that a lot of people in our industry have a hard time saying. I was wrong. I didn't think that the euro would do this. I was looking for more of a pullback in the dollar. So go back to the drawing board. I do think that the action in the pound is interesting, and looks to me like the euro pound spread is turning, and now longs are favored if you want to fade the dollar strength, I think, in pound over euro USD. But I was wrong, and I don't know, is kind of hard for people to say. Not for me anymore.
European markets are extending gains.
I don't think we're going right to 104 to new lows. I think the parity bears will get all revved up again. I just don't see it happening yet.
Yeah, parity is a nice headline, but it's a bit too far.
I don't think we took enough parity bears out. So 1320, the move to 117 was enough. It got everyone out that was short over 114. But they're licking their chops again here. You're going to start hearing more talk about it.
Okay, guys, we are just finishing this live cover-up, but before that, I will ask you, all of you guys, just to make a summary and approach of what you are watching right now in markets, and what do you think will happen in the next few hours and in the next days, and of course ahead to the non-farm payrolls. If you want, ladies first, Valeria.
Yeah. Okay, I was really expecting a dovish Draghi, but honestly, he surprised us towards the downside with his recon of quantitative easing not being enough, okay, to boost the economy. He downgraded inflation expectations pretty much as we were discussing previously. And as you can see across the board, the euro is the one suffering the most. Of course, dragging Swiss and gold with it, but the rest of the market is in wait-and-see mode ahead of payrolls, of course, which we are going to cover also live tomorrow. And anyway, I do believe that the situation in Europe is pretty awful, economically meaning, and that regardless the Fed decides to raise rates in September or in December, the imbalance between both central banks will continue to favor the downside in the euro dollar. Right? The euro is deep into quantitative easing and talking about extending. The ES is talking about rising rates. It does not matter to me if it will be this month or next. The fact is that the economy's imbalance are clear and the central bank policies are also clear. So I still do believe that the euro has little chances to see wild upward rallies as we have witnessed for itself, right? We have external factors doing that. It's actually about to break 111, and I could expect, as I said previously, a decline down to 1050, 1080 the most for today, and the market enter later in the US afternoon into wait and see mode. And that's pretty much it.
Thank you, Val, and now sorry, continue.
No, nothing.
Okay, thank you, Valeria. And now, what do you think? Now is the time of our special guest, the commenter of the speaker, our guest, Johai Alan. What do you think about that? What did you see today, and what do you expect?
Well, I was always a fan of Mario Draghi, and I think it's one of his best shows. He usually prefers to move markets without acting. He acts only when it's really exhausted all the other tools. He also needs to get the people in the ECB, especially the Germans, behind him. So with the small tweak showing he's ready to act, and with lower forecasts that, well, they match reality, he managed to lower the euro. From here in the next few hours, I think we'll see some kind of stabilization, maybe a very small bounce back up. I think it'll be a dead cat bounce, not a real one. And everything, the next really big moves, of course, depend on what's going to happen tomorrow with the NFP. The Fed is data dependent, so are markets. If we have over 200,000, I think the fall of the euro is going to extend. If we have a disappointing one under 200,000, we're going to probably have a bounce. But in general, as Valeria said, there's more downside expected to the euro and more upside to the dollar because of this monetary policy divergence. Once the Fed does hike, and I still believe there's a chance it'll happen in 2 weeks' time in September, it'll be behind us. It'll be a dovish rate hike with some kind of promise not to raise the rates further on. And I believe that maybe a month after the rate hike, we might begin to see a change of course. But in the more near-term future, I remain euro-dollar dove. Parity, I'm not a parity bear, but euro-dollar has currently from 111.20, it has a lot to move down without getting close to parity, and I think it'll begin its move down soon.
Okay, thank you, Yohei. And now is the turn of our singer, presenter, and live analysis room anchor, Dale Pinkert. What do you think,
Mauricio,
Dale?
if you could show my chart right here, I'll give you a visual on the euro. It kind of lines up with what Larry and Alienovich says. I was looking for a C wave here on this pullback back to the upside now that we violated these lows. Looks to me around 109.5, next significant level for the euro in the coming days.
Great. So thank you, everybody. Thank you for coming. See you tomorrow on the Northern Payrolls coverage. Dale, I will want you to invite everybody to the live analysis room. It's your time right now.
Hang out with us, and I'm sure there's going to be a lot of ideas floating around in our community. Do your intelligence gathering with us. It was great working with you, Maury, and Yohei, and Val, and look forward to working tomorrow again with Val for the NFP. Come visit us, no risk. You don't need to stop to come into LAR. And I think that you will see a lot of talented people showing their work. And I believe a quote I'm putting out a lot lately is don't isolate, collaborate. So come collaborate with us in our live analysis room, and I'll see everyone there.
Yeah, right now. Oh, sorry. Go ahead, Valerie.
I was about to say bye-bye. Thank you. It has been super great to be with you guys, and hope to see you back soon.
Okay. Thank you, Yohei.
Thank you, Mauricio, Val, and Dale. It's been a pleasure.
Okay. Okay, guys. Yeah, right now we will need you to refresh the page, and then you will check. You will have the right broadcast. Okay, I will finish this broadcast and then start the other one. Thank you, everybody. Have fun. See you in just a few seconds.
Bye-bye.
Okay? Bye-bye. Bye.
Bye-bye.